Well, we stay with the banking industry now as we turn our attention to Sir Richard Branson's retail bank, Virgin Money. Well, last week, Branson appointed the one-time CEO of Lloyds TSB, Brian Pitman, to head up a heavyweight board for the bank. A move that seems that potential bids for high street names like Northern Rock or businesses spun out of RBS and Lloyds may come to pass relatively soon. Well, Sir Brian joins me here now on The Pulse for what is his first television interview since his appointment. Sir Brian, first of all, welcome to Bloomberg News this morning and congratulations.
Well, nice to be here with you.
Now, what are your plans? Are you planning to build a bank or are you planning to buy a bank?
Well, it may be both. I mean, one of the reasons why I joined Virgin is that it's already established as Virgin Money. It already has 2.5 million customers on which to build. Some of the other new banks which are proposed are absolute startups with no customers. They could well be successful, in my view, because they're going to provide a very personal service. But Virgin has been in existence for some years and therefore has built up a customer base. And the plan will be, we've been increasing the number of customers and the revenue from a small start by about 15% per annum.
Now, you advised Richard Branson 2 years ago when he was in talks about buying Northern Rock before it was nationalised.
We were, yes, indeed.
And is that going to be one of your targets this time around?
Well, we've got to see what happens with banks. I mean, I believe banks are not going to be as valuable as they were before. The new regulations are changing the name of the game. We're going to have much higher levels of liquidity, much higher levels of capital, so the return on capital will be lower. It was interesting when Barclays bought a little bank off Standard Life, they bought it at a substantial discount to book value. And we could well find banks that are being sold off, not being sold off at very high prices.
So you're looking really, obviously, at a number of things. You've got Northern Rock, there's some RBS branches. Is it a question of looking to where the very good value is when you go to pick up?
Absolutely. Well, we're not going to buy anything which will destroy value for our shareholders. That's quite certain. If it's just a transfer of wealth from one group to another group, negative for the shareholders of Virgin, we won't do it.
Now, you're talking about 15% growth per annum. Is this a good time to try and persuade people to switch bank? I mean, I know there's some ridiculous statistic that says that people would rather, or more likely rather than rather, are more likely to get divorced than they are to change bank accounts. Who knows if that's true?
The first will be our existing customers in Virgin, which are mainly credit card customers. We expect to be able to sell additional services to those existing customers. It's usually your existing customers who are the best source of new business. So as we introduce current accounts, fixed-term deposits, other things, in Virgin, we will endeavour to persuade our existing customers where there's a high level of satisfaction to buy some of those new products from us.
And how do you feel about the Virgin brand at this stage, when banks are being vilified across the board, getting involved even more closely with banking? Do you think it's a good move?
All the research shows that the Virgin brand stands up extremely well on this. Very, very. It was one of the reasons why I was willing to take this job. Was the research shows the Virgin brand for financial services. That's why they've been so successful in Virgin Money. It is a good brand.
Now, you're not alone. You've said you've got competitors. There's some consortia from the US. There's also Tesco's. Surely that would be a very similar brand to your own.
I think Tesco has a good chance of being very successful. They have a fantastic distribution system. They've already sold a lot of financial products. So the real question for us is how far are Tesco going to go into the pure milk of banking? How much are they going to want to have current accounts, for example, checking accounts, as we call them, which is a different sort of business from other financial products. But Tesco, I'm sure, will be successful at selling financial products.